This is a presentation about the Financial Audit Report, Water 2015-16 Results of Financial Audits, Report 7 for financial year 2016-17. This is a summary of the report to Parliament. The full report can be read on our website. We provided unmodified audit opinions on the financial statements of all entities this year. This means that their financial statements were prepared according to the requirements of legislation and Australian accounting standards and can be relied upon. 5 of the 6 water entities produced high-quality financial statements for 2015-16, and we certified the financial statements of these 5 entities within the statutory deadline. While we issued an unmodified opinion on Seqwater's financial statements, it did not meet the statutory reporting deadline for the second consecutive year. This is because Seqwater lacked a robust methodology and quality assurance process over the valuation of its assets. Management has a strategy in place to address these issues for 2016-17. We identified 11 internal control weaknesses across all 6 water entities. All internal control issues related to manual controls. Out of the 11, 1 significant deficiency or high-risk matter was identified. This was in relation to inadequate quality control processes in place at Seqwater for validating the inputs and calculations in their asset valuation model. All water entities are on track to resolve all outstanding issues by dates agreed with their respective boards. Profit margins for the sector are slim, and small movements in revenue and expenditure can have material impacts on profit. 60% of the increase in revenue was driven by increased contributions from developers. This mainly relates to cash and assets received by the distributor-retailers, QUU and Unitywater. Water consumption by customers also increased as a result of new developments and bulk water price increases. Assets in the sector decreased because of a decline in value of Seqwater's assets. This is because projections changed from last year. Seqwater is expecting to earn less revenue from the use of its assets, while needing to increase capital expenditure in the future. As at 30 June 2016, water entities held $13.5 billion in debt, which remains steady. Of this amount, $9 billion is held by Seqwater. This represents 9% of total state debt and continues to be guaranteed annually by the state government. Under the current bulk water pricing model, the return is sufficient for Seqwater to service its debt and meet its borrowing costs. In addition, extra revenue is included in the price to cover the repayment of $2.1 billion of this debt. This $2.1 billion relates to historical differences between the cost of bulk water and the price charged to customers. Profits and retained earnings for 2015-16 supported the dividends and participation returns of $339 million made by the sector. That's $169 million to the state and $170 million to local councils. These returns were paid from cash, and no additional borrowings were made to fund the payments. Dividends in 2015-16 increased from the previous year, as the shareholding ministers of Sunwater required a special dividend of $130 million and requested a share capital return of $130 million. This $260 million payment was required to support the state's debt action plan. The water sector is sustainable. Seqwater's sustainability is dependent on the state government's bulk water pricing methodology. Seqwater has not returned a profit in the past 5 years, and its net assets have not improved. It has assets valued at $11.1 billion and borrowings of $9.4 billion. The entity's profit is limited by the bulk water price set by the Minister and the future demand and use of water. However, most of its expenditure is fixed. Thank you for listening. We trust this presentation has been of value. For more information on the issues highlighted in this summary presentation, please use the full report, Water 2015-16 Results of Financial Audits, on our website under Reports and Resources at qao.qld.gov.au.